We start this week's podcast by looking at some of the key events that we're anticipating for the week ahead, by starting looking at the diary. In terms of today, on Monday, we'll be listening out for Bernanke, who will be discussing, for the first time this year, questions and answers surrounding the US economy. I think this is going to be quite interesting, really because of the last vote that took place on the QE program in the US. The surprising feature were how many members at that time actually voted for the ending of QE by the end of 2013. Now, certainly where market consensus is for something much more dovish than that, and a continuation of the programme, certainly until the unemployment statistic hits the number of 6.5%, that unemployment number around 7.7, 7.8 at the moment. But a number of dissenting voices, and I suspect there'll be some questions on that as to how much more vocal they'll be coming through the course of the year. He'll obviously also been focusing on the US fiscal cliff talks, which we shouldn't ignore. There's still plenty of talks to be discussed over the course of the next few weeks. We'll also be hearing tomorrow from the Japanese Prime Minister. His early work on the Japanese economy has resulted in a marked deterioration in the yen and approval for a stimulus program which is designed to try and commit to an inflation target of around 2%. So he'll be talking on Tuesday. The Japanese markets are closed on Monday, but most of the Asian markets were stronger overnight. China in particular marking up about a 3.5% gain, and later this week, as we can see from the slides, we have plenty of Chinese data coming through. The Shanghai Composite bouncing quite swiftly now by about 15% off the 2000 level. In terms of corporate earnings, this is going to be one of the main talking points of the week as we start to get into the meat of the corporate earnings season in the US. We can see here that a number of the banks in the US, JP Morgan, Goldman Sachs, for example, and on Thursday, BlackRock, Bank of America, Citigroup, all reporting this week, and Morgan Stanley on Friday. And outside of that, we also have some big tech names. eBay, which is on our list of recommendations, will be reporting on Wednesday, and again we'll be taking a look at a chart there shortly. And GE is coming out on Friday. And finally here for the UK, it's the UK inflation report, which is due for December, and that number is forecast to be an unchanged 2.7% compared to 2.7, as I say, in November. So that inflation report due out tomorrow. So that's a quick look at the week ahead. So let's take a look at some of the charts, the important charts for those. And as I say, this is the eBay price chart. It's been over 12 months a very solid performer as it continues to move extremely well in its core market of buying and selling of goods. So that report coming out, we do have a note on that stock, and that's one stock that we're focusing on for our trading week ahead. Now, in terms of other charts, I think of note, I mentioned about the Japanese Prime Minister's discussion regarding inflation targets, and look what it has done to that yen, continuing that sort of very, very powerful trend at the moment, which is being, I think, exploited quite hard in the hedge fund community at the moment. It's one of the key trades of being short the yen against the dollar. So a continuation of that trend being seen there. The euro also is just about nudging 12-month highs around the 134 level, which was actually seen overnight in trades, although we shied away a little bit there. But that really follows on from last week's interest rate discussions from the ECB. In the conference afterwards, Draghi was talking about the fact that the crisis is by the by now. So confident words from Draghi, and that has continued to create some further strength in the euro over the course of this week. This is certainly helping stock markets around the world. I'm highlighting here a slightly unusual index, but it's a very broad index in the US, certainly far broader than the Dow Jones index, which is really only 30 stocks. We've got the Russell 2000 here. This is covering a multitude of businesses right across America, and interestingly, that market has hit an all-time high during the course of last week. So certainly optimism still feeding through in the broader equity indices at the moment. This optimism in equities does mean that the longer end of, or certainly medium end and longer ends of the yield curves are pushing higher at the moment. We can see here that the 10-year gilt yield's now moving up around to over 2%. It's nudging sort of between 2 and 2.1%. And the importance here is really really that forecasts are now being increased for the banking community, and the net interest margin that they can seek to achieve between deposits and obviously what they lend out at the moment. I have seen some forecasts, certainly for 2014, pushing those net margins out, and we're continuing to see earnings increases that are taking place of maybe up to about 10% for banks. It certainly means that in relative strength terms, the big leaders at the moment are Royal Bank of Scotland, Lloyds, Standard Chartered. We're also seeing relative strength out of Glencore, BP and Tesco. And where the weakness is coming at the moment is National Grid, Diageo, Tullow Oil and Apple at the moment. But certainly National Grid interesting. There's some of these big utility safe haven type stocks at the moment are witnessing some fairly material underperformance in the very near term. Whilst the dividend yields do look attractive, they're 6%, it is always being judged against this risk-free rate of return, which is moving higher at the moment. So we are going through a period of underperformance for utilities at the expense of banks at the moment. That rotation certainly taking place. So if we take a look at the FTSE 350 banking index, you can see that trend is very powerful at the moment, and continuation that we are seeing, and as I say, being followed by earnings upgrades. And finally, this is the Lloyds TSB price. This has been, as I say, the second strongest performer in the markets during the course of the last week.